Good morning. It's Jeffrey Christian of CPM Group. It's about 10:50 in the morning on February 10th here in New York. I'm going to talk today about a better gold and silver investment products. Something that's come up that we've always done since the 80s, and it's probably actually kind of useful. It's a more efficient way for investors to buy long-term exposure to rising gold and silver prices. Most investors, as we've said repeatedly, do not necessarily want to own physical gold and silver, or they don't want to have all of their gold and silver investments in physical metal. Most investors want exposure to precious metals prices, and specifically, they want exposure to rising prices. They don't necessarily want exposure to falling prices. These products that I'm going to show you here are for intelligent investors. They are not necessarily a replacement for having some of your wealth in physical gold and silver. Think of them more as supplements. This is more of a replacement for things that have become less effective investments into precious metals like ETFs, mining shares, and other precious metals products. Mining shares have been suffering for several years and will probably continue to suffer from lower betas to the gold price and the silver price. There are structural changes in the stock market that have caused this, as well as some issues specific to the mining industry. So investors are used to say, I don't buy gold or silver, I will buy the mining shares because they have a beta of 2.5 or 3 or 3.5 to the gold price. They're basically leveraged investments. Now those betas are closer to 1 or 1.5, and the investors don't get the added fillip that they used to expect from mining shares. And ETFs and other funds have fees that affect the returns. These are ways around it. These are not for those deluded investors who want physical metal in their possession because they continue to wait for the collapse of the banking system, the government, the modern financial system, or whatever. These are not ways necessarily to buy physical gold and silver, although you can take your proceeds from these products and use them to buy precious metals at a attractive price, assuming that the price rises over the period of these notes. I should add, CPM Group is regulated by the CFTC and the NFA. We only work with accredited and exempt investors, institutional investors, accredited U.S. investors, and overseas investors who are exempt from U.S. regulations. But this can be done even without CPM Group if you have a certain level of sophistication. So gold and silver principal protected notes and managed accounts. As I said, we've done these things, structuring them for institutional investors and high net worth individuals since the late 1980s. They give you downside protection. I'll show you a couple examples that we priced yesterday in a moment. The principal can have protection of 100% at the maturity of the note or the expiry of the managed account's time. The 100% principal protection doesn't apply for early redemptions or closures, and the principal protection levels can be chosen by the investor at inception. An investor might say, I want 100% principal protection. I want to be assured that at the end of 5 years or 8 years, whatever it is, I at least get my principal back. And if the price of gold or silver rises, I also have profits from the increase in the underlying precious metal. You could say, no, I don't want 100%. I'll take 80% or 90%. You could deal with that. They can be produced as structured notes or they can be managed accounts. We initially in the 80s were using these with structured notes for institutional investors and high net worth individuals, but we came to understand that managed accounts have lower costs to initiate, significantly lower costs, and they can be modified over the life of the investment to take advantage in market price changes. So CPM Group, for example, will put a position in place for a client. Hey, yeah, you know that over 5 years you're going to get your principal back, but as the price rises and falls, we may lift the legs of the investments in there to increase the profits even more. So I have two examples, both structured yesterday. The first one is a 5-year, 100% principal protected managed account. The price when we priced this yesterday was $1,872 for spot metal. The futures price in December 2027, which is slightly less than 5 years, was $2,158. We priced it at 1870. The maturity is early 2028, and the minimum unit was about $187. And this is what it looks like. The orange line is the yield, and the blue line is the spot price. As the spot price rises and falls, investors make or lose money. Now, the orange line you can see goes horizontal at 1870. That's because over the 5-year life, you're guaranteed that you can buy gold at $1,870. If the price rises, you benefit pretty much 100% on the increases in prices over 1870. But at the end of that 5-year period of time, you get your money back 100% if the price has fallen, and 100% plus the yield above 1870 if the price has risen. Again, the protection is at maturity. If the investor says, I want to withdraw prior to maturity, the investor may get less than 100% back, depending on the circumstances in the financial markets and the precious metals markets, the gold market, at the time that the position is unwound. We did a silver one too. Silver being more volatile, we had to take it out 8 years to get 100% principal protection on the managed account. The price yesterday when we priced it was $22.12. The price in December 2027, which is not 8 years, I apologize for that, it's only 5 years, was $25.47. We priced this and structured it at $22.12, and the minimum unit was about $110,000. We like to do these in larger units, $500,000, $250,000, $500,000, $1 million, or larger, depending on the client. This is the structure there. Again, $22.10 as a guaranteed principal, and then if the price rises, you benefit from the price increase. And it's an 8-year program. These are ways that investors that are sophisticated can buy the exposure to rising prices while protecting themselves against deteriorating prices. I've been waiting 50 years for the price of silver to go to $100 or $1,000 or gold to go to $10,000. Maybe I'm going to be wrong, in which case I get my money back. Something to think about on the weekend. On the weekend, I'm going to be participating in Rick Rule's Silver Virtual Boot Camp. It's a one-day event, Pacific time. It goes from 8 a.m. to 4 p.m. I will be speaking at noon, I guess, Pacific time, on silver. I will be talking about the fundamentals of silver and an overview of the market. I am going to you show this silver note in that presentation, along with talking about supply, demand, and inventories, investment demand, and some of the other aspects of the silver market. You're welcome to join us. And there is, I guess, a virtual booth that we have to find the specifics of how to deal with that. But one of my colleagues or I will be in that booth at given times over the course of the day to answer questions and meet with participants, attendees of the virtual boot camp who might have want to talk to us separately. That's all I really have for today. Wanted to keep it short after the 40-minute talk on Tuesday in our video. I'll be back next Tuesday, I believe. Our yearbooks are coming up. Our first yearbook will be launched on gold in late March. Our silver yearbook in late April, and our platinum group yearbook in late July. In the meantime, you can go to our website. You can read about us. You can sign up to buy some of our research and consulting services. And you can ask us questions at info@cpmgroup.com. Take care of yourself. Have a good weekend. Take care of everybody around you. And watch out for the world at large, because it needs a lot of help right now.